afternoon. Thank you so much for joining us today. As she introduced me, I'm Akiko Fujita. I'm an anchor and correspondent over at CNBC. And this is a really exciting panel for me to moderate today because, you know, so much of the talk here at the FinTech Festival has been about sort of this emerging technology. There's been a lot of conversations about cryptocurrencies, e-payments, and we often forget about, you know, a lot of these markets who just don't have not advanced that far in terms of technology. And so today we're going to try to have a conversation about financial inclusion. The numbers, when you look at World Bank, we were just talking about this off stage, more than 130 million people in Europe alone still within, that are not included in the financial services sector here. So the numbers are certainly big there, and we've got a very diverse panel to help us walk us through the conversation. I'd love to start it with an opening round of questions here that I'd like to put to all of you. You know, we've talked so much about just how much technology has developed, and when you look at the financial services sector, how have you seen tech transform the space? And I'll start with you.
Okay. So you're quite right. There's about 138 million excluded people in Europe and about 2 billion around the world from the banking system. And really what tech is doing is it's connecting up these people to give them digital identities, to give them access to payments, to give them access to microfinance. And it's actually taking an army to do this in the sense that you've got to have governments involved, technology companies involved, telcos involved to really build that ecosystem out to get people included.
Okay, Justo, your focus has been on the Philippines.
Yeah, that's right. And I'd like to pick up from what Anne said, that in the Philippines, if we start from a definition of financial inclusion as accessible, affordable, relevant financial solutions for all individuals and micro-entrepreneurs, then you understand that to live up to those adjectives, that we need to invest in or build out enabling infrastructure. So regulatory infrastructure, which needs to be open and enabling, ID infrastructure that needs to be accessible and verifiable in real time, data communication infrastructure that needs to be reliable, accessible, affordable, technology infrastructure that needs to be interoperable and with seamless interface, a merchant infrastructure for that needs to be pervasive, and for this specific market, over time, a financial literacy and consumer protection infrastructure. So the stakeholders in the Philippines are really focused in making this happen together. I mean, right now we have only 1% of our transactions that are digital. But the other piece of it is we already have electronic government-to-consumer payments, but the dormancy rate is very high. So clearly, part of the equation is to make it relevant to the user. So to address the demand side, we need relevance in order to have a mass adoption. And I think the challenge there in both these instances, because we're dealing with micro payments that are of low value, is to have a digital execution. And this is where technology can really help both on the infrastructure side and in terms of the interface side with individuals.
Okay, and we'll talk more about the solutions as we move on. Let me put the question to you because you're a lot closer to the tech side of things, having worked with startups. How have you seen FinTech transform financial services?
Actually, digitization and technology is changing everything and very fast. It is changing the way we look at the financial inclusion, and let us simply think that how we were tackling this issue, this problem. Just 10 years ago, we were focusing on microfinances for micro businesses, and today we have a definition of financial inclusion which is much broader, with a much broader portfolio of products and financial services to be delivered and to be given access to. let us think about what the Minister of Finance of India told us yesterday. A few steps, providing individuals with an ID and providing individuals with a transactional current account. And it has completely changed India in just a few months. And this is what is happening all over. And the World Bank, as you know, makes a survey every 3 years. The first one was done in 2011 and then in 2014. And what we have seen is that it is true. I mean, the problem is huge. The problem is that 2 billion people are left behind, 2 billion people are financially excluded. But what we have seen is an enormous progress since from 2011 to 2014. 700 million people had gained access to a transactional account in that period. And the new survey is not been released yet, but I expect that due to the impact of technology and mobile banking, probably we'll see that many more people have gained access in this period since 2014 to financial services.
Henri, let me get your opening thoughts here, because you work all around the world, of course, but here in ASEAN, you work with the least developed nations. So the starting point is much lower, but when you look at, even in those countries, how has tech transformed the financial services sector?
Thank you for the question. So I will base my answer on example around in the region. And I would like to mention maybe 3 dimensions where I see technology transforming the prospect of financial inclusion. The first one is really overcoming the limited banking infrastructure or financial sector infrastructure. Take the example of Myanmar. Myanmar, I think, has 1,000 bank branches, but Myanmar has 40 million mobile phones, and 80% of those mobile phones are smartphones. If we take the example of how we have seen the pace of adoption of financial inclusion through digital finance in other countries and continents, you can only anticipate the growth of financial inclusion in Myanmar. The second thing is, it's really an enabler of accelerated growth. And if we want to bridge that gap of 2 billion people that Anu were mentioning, we need to look at technology seriously. And here I would like to mention an example of our cooperation in Vietnam with the Lien Viet Post Bank, commercial banks, where we have helped them develop mobile wallets with targeting rural areas, especially women in rural areas. In less than a year, we have reached more than 1.5 million customers. And those mobile wallets are connected through the national switch to the full banking sector. So you imagine how you can leverage those wallets for a range of applications. And the last point is, I think technology has a potential, incredible potential, to be leveraged beyond the financial services themselves, but to a range of applications we can really empower people, whether it's access to prices, commodity prices for smallholder farmers, as we have seen many applications in East Africa, for example, or whether it's to promote financial education and financial capabilities for women. And we are working, for example, in Myanmar with the Wave Money mobile wallet to really have an example of gamification of financial education to increase the financial capabilities of women. So I think on these 3 levels, technology has a tremendous transformation potential.
Okay, great. Before we continue, I want to remind our audience that we are taking questions through Pigeonhole. So if any of you are logged on, feel free to post some questions, and then we can address it to our panel moving forward. A lot of you have cited the World Bank study, and the number that really stands out to me is that 2 billion that are unbanked. Henri just talked about those who are unbanked in this region. But when you look broadly speaking, is there a profile here? Who are those 2 billion who are unbanked?
Well, I think Henri actually brought it up that actually quite a lot of them are women. And we've been working with people like UN Women in order to give women identities, digital identities as a starting point, to include them, because if they're born in places like Africa, often their births aren't registered. They don't have any birth certificates, they've got no driver's licenses, and any form of real identification. And this is why things like biometric technology, which is very recent, is making such a huge difference. It's making a massive difference across India, where I think 1 billion people are now included. Once you have that there, then on top of that, you can build a very sophisticated layer of products and services that deliver to everyone. And as I said earlier, working with the big suppliers like the telcos, you can do this. We're working with Airtel, and we're actually giving millions of virtual card numbers out actually directly into the telephone. So where you don't have the infrastructure in the country, suddenly someone's got an identity, suddenly you can serve them with this kind of product. And it's revolutionizing everything.
When you talk about that, though, I mean, Henri, I want to put the question to you because, you know, we're talking about, you know, the Aadhaar system over in India, you know, national ID system. I imagine when you talk about a place like Cambodia or Laos or even Myanmar, they're not at that stage just yet. So how do you go about narrowing the gender divide that you pointed out exists, given the limited infrastructure that's in place right now?
No, I think in those countries, first we need to focus on building the rail so that you can basically develop a larger range of use case around digital finance and financial inclusion in general. I think you need to match that with a keen attention to developing financial capabilities. I think we tend to ignore, actually that's an interesting development we are seeing recently in Bangladesh, where the acceleration of financial inclusion through digital finance has increased the gender gap. And that's due to, you know, women's constraint in accessing, using, owning, and also kind of being familiar with the feature of mobile phones. And I think there are interesting programs where, you know, some organizations are using the younger generation to train the parents and the mothers to become more familiar. So I think to really kind of bridge that gap and address the jumper gap, I think it's a mix of measures about, again, building the rail, building the user case, and looking at how to leverage FinTech, frankly, to kind of increase the range of access and also connecting different financial services. You know, what we realize as well is even in countries which have higher financial inclusion compared to other, I think of Cambodia, 50%, as opposed to Myanmar, which is less, which is about 30%. Most of the banking accounts in microfinance institutions in Myanmar are dormant. So again, I think the challenge here is how you create value around those savings accounts by creating more user case, how to link them to remittance proceeds, like we are working on with AMK, for example. So these are real challenge. I think it's, but the gap, you know, will be filled. I think the momentum is there, and I think what's tremendous if you combine, you know, working with the policymakers and working with the innovators in the private sector, we will get there.
I love that private sector piece, and I think the NGOs, the private sector, and the governments can work really well together. One of the things I do think is that coming up with the right use case is very important. And I know in Africa, we've opened a labs with the Gates Foundation in Kenya. And they've just launched their first product. And as for African farmers, it's rolling out across Tanzania, Uganda, and so on. Many of the farmers are women. And the idea behind this application is they can use their phone to sell their goods, for example, edible oil, with prices that come from the market 6 times a day, instead of having to deal with middlemen. So they actually get more money as a farmer. And we came across an entrepreneur in Tanzania who is willing to pay women farmers slightly more for their edible oil in order to encourage them to use the technology. This is the kind of thing, along with, as you say, education. I think education is very needed for everyone in the financial, you know, financial education, right?
Yeah.
Sticking on the theme of sort of the limited infrastructure in place, so we've talked about this before with the Philippines. It certainly fits into that category as well. And, you know, looking at the numbers, I think the central bank put out, it was more than 80% of households that are still unbanked. This is a cash-first society. So as a bank, how do you go about providing a solution, given that you don't necessarily have control over building out the infrastructure and the regulation? How do you come up with the solution?
Well, although we have no control, like I mentioned, the stakeholders have come together and worked. In fact, I'm the chairman of the Philippine Payment Management Institute, which is a self-governing organization, self-regulating organization working with the central bank precisely to address, it's both banks and non-banks, you know, creating the rails that I commented on, although some of them are outside our control. But clearly, our business model is what we call O2O, offline, online, offline. So in the absence of infrastructure, we don't want to proceed in creating this impact because it's a huge impact both in dignity and in incomes. And so we focus not on the payment space, but more on the credit space. And in that space, for example, we were talking about women, and in the Philippines, by coincidence, many microfinance institutions lend to women only, and they don't, in fact, lend to men. And what are some of the digital solutions? So one of the major issues is collection in any of these microfinance. So we actually have an execution with a mobile network operator to use their e-wallet and their ramp-on, ramp-off cash stations, which are usually for loads, to allow these nanais, which is mothers in the local language, to be able to pay from their mobile phone the $10 a week on average that they owe to the microfinance institution. So it goes from the MNO to us to the microfinance. Those that are seasoned, we can do the reverse. They can draw down on their loans and ramp off in the cash stations of this MNO. So that's an example of a O2O execution. And so far, there's about, this is like 3 or 4 years old, there's been $400 million that has passed through that, to that system. So that collaboration is an example of how to respond in the context of infrastructure shortcomings.
Juan, let me see if I can bring you into the conversation here. As somebody who works very closely with the startups, Justo was just talking about the online to offline model, which has been quite effective in the Philippines. What kind of solutions are you finding startups pushing through to try and become a lot more inclusive?
Oh, they're building new solutions every day. I mean, all the numbers we are mentioning, 2 billion people lacking of a bank account and 80% people in Philippines, all of these numbers describe a huge need. And wherever there is a huge need, there is a huge business opportunity and there is a call for disruption. And this is what we're seeing. Disruptors, innovators, startups, finding the way of providing these financial services and products in a different way. In what way? Disruption takes place when we are able to do things in such a way that we deliver a new product which is cheaper, which is simpler, and therefore is affordable for the most. And this is what entrepreneurs are doing all over. Yesterday, I took a walk. If you haven't done it, I recommend it strongly, to the space of startups, the exhibition space. And I talked to some of them, and there's one from Malaysia. And this guy, I have his name here. Just let me mention him because he dedicated me some time. Mehedi, the name of the startup, I'm not invested. Huh? The name of the startup is My Cash Online, okay? And this startup is providing mobile banking to 6 million migrant workers in Malaysia. People who 90% of them doesn't have a transactional account, a bank account, but 80% of them have a smartphone. And all of them have almost free access to internet through coffee shops. And so, I mean, for the first time, these people, and nothing is for them, as the founder of this company explained me, for the first time they can think of store their money, save their money, paying plane tickets, send money to their home countries. And this is a solution that has come from a startup. So this startup has been now 18 months in the market, and these 6 million people who were left behind were there before this startup was created. You know, so these entrepreneurs are coming with new products, with maybe we that take for granted, you know, that we have a credit card and that there is going to be funds, wouldn't like to use because are lower category products. But these products are providing a solution, are addressing a problem for many people who simply were left behind.
And I think this is a great example. And, you know, for example, we're working with bKash in Bangladesh for exactly that reason, because, you know, they built a local infrastructure and we're partnering with them in Western Union to be able to send funds from abroad into Bangladesh. And it's so necessary to actually be working with the startups in the different countries. We love the idea of that. And what we've been doing in Mastercard is actually opening up our network, creating APIs around the world and saying to startups, you know, come and play in our sandboxes, build something that works on this massive global network and deliver things into your country because, you know, as you say, you have to have the on-ramps and the off-ramps. And people have to be able to move from the telephone to cash to the bank account and back again, for the unbanked to deal with the banked and so on. And that's the only way we're going to solve this problem.
Henri, I want to bring you into the conversation. You know, we're talking about all the, you know, the ideas that are out there. These startups are there. How do you go about connecting the dots so that those companies and those ideas get to the proper markets that need that kind of solution?
Sure, thank you. And I think remittances is a great example to talk about, because this is where the power of technology will be leveraged by smart partnership between financial service provider, FinTech, MNOs, and I think if you can create a space where they can cooperate, they can develop ideas together, and we heard a lot of these ideas, you know, this morning, for example, that will have a transformational impact. And, you know, for us at UNCDF, we're UN agencies, we are focusing on a lot of our activities on financial inclusion, but what we can do is create that space and create the incentive for this kind of partnership. So we have, for example, a challenge fund based in Bangkok, where we have recently done a call for proposal around innovative ideas to formalize remittances and to leverage remittances to drive financial inclusion. And we are, you know, out of that, we announced yesterday the kind of 4 winners of that challenge fund with whom we are going to work. And here you have very interesting ideas exactly illustrating that power of partnership. So this is, you know, these ideas are about, for example, enabling wallet-to-wallet remittances, which are very new in the kind of least developed countries in the ASEAN regions. For example, we're working with FinTech to do wallet-to-wallet remittance product between Singapore and Myanmar. We are working with Transfer2, which is a regional platform to basically connect cross-border remittances from a number of countries and link them to formal remittances channel in Myanmar, where basically for the first time the market around formal cross-border remittances linked to accounts, whether mobile wallet or bank account, are going to be feasible. And so these are and then the third one I should mention is Value, which is also doing wallet-to-wallet remittance between the corridor of Malaysia and Myanmar. So these are examples of really powerful partnership between a range of providers to basically formalize remittances. And if we do that, it can have a huge impact on the economic growth of those countries and the financial inclusion within those countries.
Yeah, I'd like to jump in because talking about remittances, and so while most of the discussion is on the e-wallets and the payment, I want to go back to credit as being an important catalyst. And talking about remittances, in fact, one of the O2O solutions we have is we partnered with one of the biggest remittance companies in the Philippines. They have 2,300 counters compared to our 100 branches in the mass market bank. And we enabled them through an API interface to now originate loans from the beneficiaries of these remittances. So using that information of how much they receive, how often, what amounts, and the regularity of it, to be able to apply data analytics and make credit assessment decisions, which is important because most credit decisions at the microfinance level are face-to-face. So this is a way of dropping the costs down. And in fact, we're now working with Microsoft on a blockchain execution of single unit agents or 2 or 3 unit agents, bringing them all together in a collaborative commons. And right now, the universe we're looking at is 2,600. So from 100 branches, we leverage to 5,000 agents using data analytics, API interfaces to actually originate loans from the beneficiary. So I think that's a very here and now model. It
Yeah,
actually...
I was going to say, I thought it was interesting because I know when we had a conversation initially, you'd mentioned, a lot of times technology is used to empower the user themselves, but that is on the assumption that they have access to that technology. What you're saying is that from the banking side of things, you're utilizing technology to try and come up with the most efficient system that's in place. You were talking about loan rangers that go out with iPads.
Well, we added, on that, the complementary piece to that is we added mobile relationship managers that are enabled in the same way as the remote counters to actually go on-site to public schools, to markets, to villages, and originate loans on the spot. And we even have situations where we can do it outside of office hours, or most importantly, in times of need. So there are examples when specific needs, disasters, or a natural birth that turned out to be cesarean and there's a need. We can send people to the hospital room, run through the application, and book a loan right then and there. So we feel that that use of technology, working with partners and mobile opportunities to be actually affecting in the here and now in a major way the livelihoods of this, I wouldn't say they're unbanked, but they're low-income persons.
A lot of the markets we're talking about, the solutions are there, as we've already established, but it's about changing habits as well. We're talking about a cash-based society. How do you get them to adapt the technology that's out there as well? A lot of times, India has been brought up as an example. You just create a massive shock to the system and hope people adapt and follow. Is that the approach, Anne, you think? Or is it about slowly implementing things, incremental steps that will get you to your ultimate goal?
Well, I don't think you necessarily have to do a big shock to the system in every country, but I do think that you have to have a natural funding source. And, why should somebody who has a few dollars a day actually load those dollars onto a mobile phone? It just doesn't make sense to them. And I think that most sources of natural funding come from two areas. One is from governments who pay things like farming subsidies, they pay child benefits, they pay pensions, and so on. And another source is the NGOs, such as the World Food Programme, who provide a lot of funding for people who are in disaster situations, or, like the migrants from Myanmar and so on. So once you work with these big bodies, you can actually transform things in a very short space of time. So an example of that is we worked with the South African government who were having identity theft because they were delivering benefits to the citizens and people were claiming to be the same person and claiming benefits several times. The money didn't get to the right people. The government was losing money. What we did was work with the government agency, get everybody biometrically set up, and then we're able to distribute 21 million benefits a month through putting it onto cards, actually, and then into mobile phones. And you immediately eliminated the identity theft, so it was a win for the government. They were saving something like $350 million over the life of the transaction, which was 5 years. And the people in the country were suddenly included in the financial system. So that's an example of a real sort of government change, which wasn't quite the same as the demonetization in India. But I think that lots of different methodologies can be used in different countries.
Henri, what do you think is the right approach, especially when you talk about the markets that you have?
I would say first I fully agree with what you said, Anne, about I think we need to recognize that for a lot of people who are unbanked, often their first contact with the formal financial services may come through a payment service. And I think leveraging technology to digitalize social payment or emergency payment is probably a very good way to create that footprint. The second thing is that, we have seen in some of the diagnostic work and study across different markets that even in countries where you have a fairly high presentation of digital financial services, you still have a cohabitation with cash at a high level. So people who have the options to use digital financial services often to continue to use cash in their daily transaction. And that's a factor of limited abilities to avoid using cash. So that's a question of also rails and basically digital financial system apply to the majority of transactions that these people have to face. So that will take time to build. But also it's, putting the challenge for the technology provider and financial service provider to mimic what is perceived as the advantage and benefit of informality, with the formal financial service provision. And, informal finance, an informal system usually have the trust, they have the convenience, they have the proximity, and I think you need to mimic those values through the formal financial channel. And I would say, what struck me this morning is the emphasis of simplifying the application for the use of financial services. And I think with smartphone and the progression of DFS and the application of FinTech, we could land to a situation where the application become more and more simple. So if you have this push factor with the social payment, emergency payment, simplification of interface, and then financial education and capabilities combined, you will see that shift.
We're getting some questions in from the audience. I want to see if we can get to those. Let's see, the first question here, I don't know if I'm doing this right, is how do we address the concern that wallet providers could end up monopolizing the client's data and setting themselves up as the only source of loans, i.e. creating walled gardens? Who wants to take that one? That seems to be a big concern that, look, you can sign everybody up onto the system. Well, then what happens to that data? Who would like to take that one?
Well, in our case, we keep the data separate, and that's why our focus on the lending side, right? But in general, we look at fintechs as both a defense and offense, builds up or enhances our defense and offense capabilities precisely against a bigger threat. And so you're mentioning, or the question is about wallet providers. I would be more worried about the cross-industry platforms, because the customer experience that they're providing, and I won't name names, are clearly a much broader through healthcare, entertainment, shopping, etc. And you can imagine the amount of data that is available in those platforms that then can be used to create loans, or if you believe in Richard Thaler's nudge, social engineering to architect choice. And so that to me is the more interesting thing. And the governments or the antitrust or competition commissions in some sense need to start coming in to allow people, individuals, to download their data. And I think there's even I don't know if you would call them a FinTech, a tech that allows you to keep your data separate, and anybody that uses it, you get the fee. So it clearly establishes the customer and not the wallet or the platform as the owner of the data. So I think in time, you're going to see a migration to that model where individuals, consumers are going to take control of their data, and people that use it will have to compensate them. So it's a long story, but it's happening, and I think that's looking forward what probably will happen in the future.
I think Justo's absolutely right that actually, and the thing that you describe is that individuals could have personal vaults, which is a very interesting concept. But I think we are some way from that. I think that people are becoming more aware of how their data is used and who owns their data, especially because of the increase of cyber crime. And that's why I think that it's very important that as we address things like financial inclusion, that we're using good authentication methods and that we're actually providing trusted financial services, and that people see that the partners that are building these services, whether it's their own governments, whether it's big networks such as Mastercard, whether it's their banks, that these are trusted third parties. And I think that the general public are becoming more and more aware of that as time goes on.
Juan, let me ask you this, because are we seeing that being addressed? I mean, Anne just talked about the security concern and what happens with the data. We understand the solutions bit, but are you seeing the solution for security being addressed among these startups?
Again, many of the solutions are coming from technology, and again, walk around and you will find several security solutions without getting out of this festival. It is true. I mean, we are addressing one big problem, and we go to the next stage, and as it usually happens in life, we're facing new different problems, and one of them is privacy and cybersecurity, and of course we have to work a lot on that, not just in technology, but also adapting the legal framework and applying a principle which is very important. I mean, we are talking about FinTech and about legacy institutions as if they were two completely different worlds. And somehow they are, but they must be under the same regulation, same services, same regulation. We are very strict in requesting companies such as Mastercard or such as commercial banks, to be very careful the way they keep the data of their customers, and we have to require exactly the same thing to FinTech.
Let's get to another question here. This is about reaching some of the most remote areas. And Henri, maybe you can take this one. We've been talking about the need for marginalized people to be financially included, but what are the main consequences of financial exclusion?
I think we heard this morning both from Queen Maxima and Michael Vigan from the Bill and Melinda Gates Foundation. I think very telling example of what it means to be financially excluded. It's basically having huge limitation of how you manage your daily life and how you manage daily expenditure, how do you manage risk, how do you manage cash flows. So, I mean, the cost of financial inclusion, it's huge for the individual. And the consequences are well documented. I mean, the example of how having M-Pesa in Kenya kind of lifted 10% of the population out of poverty just by the ability to manage their daily financial lives more effectively. I think for poor people, one of the challenges is to be able to leverage lump sum when they need it for emergency or for paying recurring expenses like schools, fees, for addressing, investment opportunities. And I think access to basic payments, saving credit, insurance services are key to that. So I think I think the proof of that is people who are financially excluded and only relies on informal financial schemes use a very large number of such schemes, and they have complicated financial lives because I think they have to juggle with all of these constraints, which are much less options than people who are financially included. So that's what I would say to that.
And I want to say something because you started off by mentioning the 138 million people excluded in Europe. By the way, these people are not refugees coming into Europe. 87% of them are living in the country they were born in. A third of them are actually employed and earning income. So it's not that they're unemployed. And the average age is about 42 years old, so they're not young people. What does it mean to be financially excluded in Europe? It's actually probably much harder than being financially excluded in an emerging market. If I want to buy a train ticket in London to go and see my mother in Newcastle, and I just go to the train station and buy it with cash, it costs me about £120 to buy a second-class ticket. If I actually buy that online 1 week ahead of travel, it costs me £44. So just think about this. You are really hurting people, often low-income people, by having them not able to be able to do things online. It's amazing.
You talk about that number of roughly 140 million and how a lot of people are employed. Why are they still excluded? Is it resistance? Is it a lack of trust in the banks? What's holding them back from getting in?
It's all sorts of cultural factors. They can be small business owners that, you know, choose to deal in cash. In some cases, it's a lot to do with tax in that particular case. It can be that, you know, they just haven't adopted the banking system. I think 20% of the Italian population were like that at one point. Although they're sort of reasonably wealthy, they've got savings and so on in cash. Actually, the Italian banks got together and created something which was just a light banking, transactional banking capability using a card, and a lot of people started to adopt that because they wanted to buy online. Sometimes it is because they're unemployed or because they're younger people, and they just actually haven't entered the banking system yet. There's a whole plethora of reasons for it.
We've got a question here that builds on that question. I just lost it. Where did I put it? Okay, here you go. Providing access to financial services for the unbanked is one thing, but getting them to actively utilize financial services is another. How do we ensure the latter? How do you ensure the latter to ensure meaningful participation?
Well, I mentioned that even in the government to citizen payments could be electronic. We have a conditional cash transfer, which is huge amounts. It ends up in a card, and they go to the ATM and get cash. So clearly, one of the reasons is these are low-income earners. They can afford one wallet. It's either the wallet in their pocket or bag or an electronic wallet. They can't have money in both, right? But I think the other, you know, going back to the loan side, we have a collaboration with a FinTech. So this is an example where we use telco data and identified 4 million prospective borrowers. It goes through an algorithm. We've done a pilot of 20,000, and we give clean loans of $200 or less. And it's short term, 6 weeks, 8 weeks. So many of these reloan. And in fact, the default rate improves over time as they become more seasoned borrowers. So from the credit side, which is where we're really focused on, it's a way to keep money in an electronic form because there's a constant replenishment, if you will, of that wallet. So that's one idea.
Henri and I were discussing earlier the alliance that Ruth is part of. What's that?
The Better Than Cash Alliance.
The Better Than Cash Alliance. And one of the things that she was telling me when I met her was that they'd opened bank accounts for women in some parts of Africa. And then some of the husbands had turned up to take money out of these bank accounts. And the bank said no, obviously, because they said, you know, that's against the banking rules. And the husband said, yes, but, you know, under our tribal rules, you know, whatever hers is mine. And they said, yeah, but under KYC and international banking rules, that's not how it works. And the next day, there was a whole queue of women outside the banks to actually start putting more money into the banks because they realized it was a safe place to keep it.
There you go.
The thing is that it's getting people used to the idea that they don't have to go and get cash out immediately, that actually it's quite safe to leave your money in a bank. And these are good examples.
We had a similar experience with Oxfam, when we had that huge typhoon in the Philippines that killed so many people. And Oxfam decided to, with Visa and us, to put money into a card. They would give money in a basketball court by cash every month, so they changed that. And what was interesting is, people didn't withdraw everything because they knew when they got home that hands would be out. What's even more interesting is that they learned very quickly, I mean, these are the poorest of the poor, to actually, if I remember the statistic, it's like 36, 38% actually learned to use the point of sale terminals. So the adoption rate was really great, and I think it's just the universality of cash as a medium of exchange. When you don't have too much of it to begin with, becomes a real competition. So I guess this alliance that you were talking about is well named, Better Than Cash Alliance, but that's a challenge.
So when we ask the 2 billion unbanked or the 200 micro and small and medium enterprises that doesn't have a transactional account, when we ask them why they don't have access to a current account, to a transactional account, what they answer is that they cannot afford it. That is the main reason. So if we like to engage people, if we like to ensure meaningful participation in the financial system, if we really like to fight financial exclusion, I think that we need to give more chances to innovators and startups and people thinking on how to leverage on existing technology to provide different solutions, different financial services and products. And we need to know that these FinTech startups, these innovators, face exactly the same problems that any other startups. They need to find out the real business model, and when they find the business model, they need to scale up, and all of that without running out of cash. But on top of that, FinTech startups face two additional problems. One of them is that they are trying to enter in a very highly regulated industry, such as the financial industry. And it is true that there are some initiatives and a growing number of governments and institutions that are creating regulated sandbox, and that there are companies such as the represented in this roundtable, and Mastercard particularly is being pioneer in supporting startups, which are collaborating with them and giving them a space and giving them the chance of interoperate and connect to platforms and to use their infrastructure. But I think that we need to give them more space, more room, and to wait for new solutions to really engage these 2 billion people who are left behind.
Okay. Henri, I'll let you answer this, but let me see if I can add this question into the mix as well, because it sort of addresses another issue here, which is as financial inclusion begins, how should the state step in to ensure that consumers are protected from mis-selling, lower leveraging, predatory pricing, and other factors?
So let me address both then. I think the lack of participation, the low usage, is something which I think have been a challenge. Not only recently, I think, we know that in countries, 75% of savings accounts in microfinance institutions are dormant. I think, with the kind of revolution of digital finance, we have one of the major challenges has been also low usage, which is a real issue because it doesn't make the business model profitable for the providers. And so I think there is a recognition first that we need to design products which are tailored to the needs of the client. And the concept of client-centric design has really become, I think, a major, almost a mainstream ways to look at product design and be able to sit down with the providers, MNOs and others to think of that client-centric design approach has become, I think, a priority for all of us. I mean, it's definitely something we apply very strongly at UNCDF, because that's going to determine the value to the client and the usage. Now, the usage will depend on how strong the rail are and how much they can operate outside cash. And this is where, I just wanted to reiterate as well the kind of ambitions of the Better Than Cash Alliance, which is a global partnership, with government, private sector development organization, which is helping transition from cash to electronic payment. and working with government, with private sector, with development agencies to do so. I think in doing so, what is really powerful from what we heard in this conference is, FinTech application can really increase the value in terms of range of options and usage once you have that digital trail. And I think that's where we need to also look into the future and how can we increase the value for customers across a range of applications, looking at FinTech innovation, which can drive and ride on this kind of digital footprint that is being created now, often with push also from government or from development agencies. Now, the question on the role of the state, I think we touched a little bit before on, the need for having strong protocol around the use and protection of data. So I think that's one aspect. I think also creating the right, setting to test regulations in a way which protects client, but also doesn't stifle innovation is another one. And I think the idea of sandbox, national, regional sandbox, to kind of test the right type of regulation which will protect customers is also important. And finally, I think there is also a kind of the need for strong industry code of conduct as well on how, you kind of leverage digital platform for offering a wider range of services. And I think, for example, of digital credits. You can roll out very quickly digital credit around platform, but that can lead to over-indebtedness. But at the same time, that can lead to great benefit for the clientele. So you need to kind of look at what is the real value for customers and avoid this kind of, drift.
And we always see that the private sector really be a big driver in these changes, but of course you need the government on board as well. You were talking about the challenges of getting regulation on board. These things take a lot more time.
Yeah, regulation takes time, but I think where the government steps in are often things that governments are intrinsically involved in funding and are very interested in having work in their countries. So, for example, it's things like transit systems. We were talking about use cases before. We're working with over 100 different transit systems around the world, together with the governments in those countries. And the governments are doing things like, I was in Colombia a few weeks ago, and I went up to Medellin, and I actually got on the metro that connects up to the cable cars. It brings the poor people down from the favelas to be able to work into the cities, and you can travel around this for like $1 a day. It's this kind of thing that, the government are involved in and are deciding about how it all works, that gets the pricing set properly and so on. It's also working with people that are highly regulated, such as the banks, such as networks and so on. We can't just go out there and do things that are predatory or whatever, because effective regulation already works in our space. So I think there are things in place that can make it all work today.
Justo, there's a question here for you, so I'll let you kind of build on that, but let me just get the question out there because we only have about 5 minutes left. The question here is, what can banks around ASEAN learn from your open APIs platform to create more value to their customers? And is your bank involved in supporting some of these entrepreneurs, which I think you addressed earlier?
Yeah, so on the first question, what should they learn? They should do it. They should embrace it. So I think it's important because part of the answer to that question of what can governments do to ensure consumer protection, etc., I would say to a large extent is to create competition. Give the customers choice. Social media is already an effective voice to these consumers, but that voice becomes moot if you can't choice. So if you don't have choice. So governments need to, and in the Philippines, that's what we're working on, need to demand interoperability of all these different wallets and payment systems, etc. And that way, the API piece of that is to make a seamless interface between one system and another, right? So that's the big picture. On a more specific case, if you're partnering if partnering is part of your strategy, in the example I gave where we're leveraging on a counter, increasing our reach through counters, then how do you do that in a cost-effective manner? So we enable them to an API. And I think that's the main thing. Internally, we also use APIs to streamline our own internal systems. Because as you go agile and have to iterate quickly, you can't do it.
Okay, let's see if we can get
The
one
old
more.
way.
Let's see if we can get one more question in before we go through our final comments here. Let's try this one. The majority of people using mobile money like M-Pesa do not think they need a bank account. Is the way forward for financial inclusion to be e-wallets as opposed to banking services? Who would like to take this one?
Well, I think the very important thing, and Justo talked about this, is that basically you want to be able to move from being able to move money around to having inclusive growth. To have inclusive growth, what does that mean? It means that you can have lending. It means that you can start having insurance. It means that you have to have a much broader and wider set of services than are currently available today through the very plain vanilla, just the moving money around kind of e-wallet structure.
Okay, great. So we just have a few minutes left here, but I'd love to get your thoughts to close out the panel here. We started our discussion by talking about some of these numbers coming out from the World Bank, and 2 billion is the big number that we had. 2 billion people who are unbanked. So let's look 10 years down the line. What do you want to get that number down to? And what is the one piece of technology you think that can push the needle in the right direction? And we'll start with you.
Well, inside Mastercard, we actually started in 2015 and had a target of bringing the next 500 million people in by 2020. And I'm glad to say that, you know, we're well down the path of that, over halfway towards that. And the way that we push the needle on that is actually using our network to actually do one huge change in a big country at a time, if you like, bringing up a whole ecosystem by working with the mobile operators, the local banks, the new internet service providers, the UN agencies, and the NGOs. And you know, we've been very successful at that across a number of countries, and that's how we're doing it.
What's the number that you want to go with?
Well, I'd love everyone to be included. But then I'm a super optimist, so.
I guess we in the Philippines, I would answer that question by saying partnership. And so it's not a specific technology, but the fact that the way for us to engage a broader area of people, FinTechs, you know, analog counters, whatever it is, to be able to extend the reach. So the big question is really reach. I mean, we have 42,000 villages in the Philippines, and there's no institution, even the biggest, or even the combination of it can reach that. So you really need a omni-channel approach. Mobile, counters, FinTechs, and technologically, the way you would connect is through APIs, because that would be the way to do it simply. So if you're going to make me make a choice, that would be the technology choice, because we believe in the partnership model in terms of being able to extend reach and produce the kind of customer experience that is, as we mentioned earlier, integrated into the everyday lives of these people so that they opt a digital solution. Whether it's a wallet or a bank account is immaterial. So that would be my goal. And our country goal is to get 20% of transactions digital by 2020.
So from 1% to 20% in
And
the
we're
next
happy
3
to
years.
help you. Definitely happy
That takes
to
a
help.
big optimist, right? That's a big goal there.
That's a top-down goal.
Okay, we'll check in 3 years. All right, Juan, what do you think the number can be at?
I think that universal financial access for 2020 is not a crazy idea. It's not a crazy idea. It could have been a crazy idea 10 years ago. Not now. We have the technology. It is there. It is available. But achieving universal financial access will require a lot of collaboration, tons of collaboration amongst government, legacy financial institutions, and innovators. And if we move forward fast and we take ambitious steps, such as what countries like India have done in the last months, I think that there is something achievable.
I guess the pitch for a lot of companies who are here, a lot of startups, looking for opportunities, that's where the growth is.
Well, it is a huge need and it is a huge business opportunity. A beautiful one, because they will be better in the world around them, by providing financial access to many people.
Okay, Henri, you're working with some of these communities that have the biggest barriers in place right now. How optimistic are you that the needle can move, and what needs to be done to get there?
So I will put my answer in the context of the ASEAN, where we work, and where you have a clear divide. I mean, if you look at Myanmar, Cambodia, Laos, for example, some of those countries are like 30%, Myanmar 30% financial inclusion. And if you look at the use of more than 2 products, 2 financial services, it goes down to 6%. Other countries in the region are more around 80%. So our ambition is to help to close that divide. And we see the great opportunity to leverage financial technology and innovation of the range we have seen here over the last 3 days to really bring the benefits of those innovations to those countries who need to catch up from the rest of the region, and in that contribute to the objective of greater financial integration and economic growth and inclusive growth in the ASEAN. So that's what I would say in the context of that conference. And I would also add, for us, is also looking at how to bridge the gap to increase access to finance to the MSME. We haven't talked so much about it, but I think a lot of the innovation we heard today were very relevant to address the needs of SMEs, which produce the great majority of jobs and employment opportunities and growth. And for us, the objective is also how to leverage these, digital technology revolution we have seen and heard over the last 3 days, and to bring that to also support the growth of MSMEs in the region.
I think Henri's making a great point, and I think the thing, we've actually seen QR codes being, raced across China. And I think that QR-based acceptance is the way that you're going to bring a lot of the small businesses into the system. But now that people have got telephones, they will be able to use them to read QR codes, and it will be a much cheaper and effective way to roll out instead of terminalized technology in the future. So very exciting. And you could go telephone to telephone as well, because everyone's got telephones and merchants could use them as well as individuals. So there's lots of technological solutions that could fix that problem.
We'll leave it on that optimistic note. Thank you so much for joining us today, and thank you.